Hi, my name is Josh Mahony, Chief Market Analyst at Scope Markets. Today, I wanted to do a video into silver. Of course, we've seen huge volatility of late. There's some question marks on whether we're due another leg lower from here or whether it's time to buy the dip. Certainly, I think what's notable is we've now entered a week-long period, just over a week, where the Chinese are off celebrating the New Year's celebrations. It means that we have lower transaction volumes in China, which to many has been propping up prices. That does raise the risk of near-term downside for the precious metal. As we can see here on the sort of US and European side of things, much of the silver trading takes place with paper contracts. So essentially you're trading contracts. Most of the time people don't actually take delivery of those contracts. That means that the likes of COMEX can have much smaller amounts of silver or gold in their accounts compared to the amount that they have actually trading and potentially eligible for delivery at the end of that contract. But what generally happens is that they don't physically settle, and instead they get rolled over at the end of the contract, or they get settled in cash. And you can see here the differential is pretty stark when it comes to silver. With gold, it's 2-to-1 in terms of the amount of gold that they have in COMEX compared to the paper claims or futures open interest. With silver, it's over 7-to-1. And therefore, you have the possibility that if we get into a position where everyone suddenly actually wants to take delivery, which isn't normal, then they would be in trouble. But you'd probably say that that is the kind of thing that's happened in the past. Now, what happened not so long ago was we saw this massive run up in terms of the price of silver. And that, of course, made people start to think, wow, we're now seeing people taking delivery in particular, which is something that we've seen over in China of late. And this clamor for silver and this feeling that there is a shrinking supply means that people are more likely to take delivery and suddenly would get a silver squeeze. Well, what happened? Well, instead, we saw around the same time that we saw the announcement for Kevin Warsh as the new Fed chair, we saw a collapse in terms of the price of silver. We also saw some strengthening of the US dollar. You could say it's down to that factor. Is it a case of people thinking we're going to see a more hawkish Fed? Is it a case of thinking we're going to see a rebound in the US dollar? Is it a case of thinking we could see a turnaround in terms of treasury yields? A number of different factors playing into it. But certainly, I think from the perspective of many within the likes of COMEX alongside the CME, felt the market was overstretched to an extreme degree, and therefore it was in their interest for us to see this kind of move lower that we've seen. For CME, their role within it was to constantly raise margin requirements. Now, what does raising margin requirements mean in terms of the price of silver? Well, if someone has a long position and they have enough margin to keep that position open, if it goes against you, which it did in a very sharp manner, then if you increase the margin requirements, it means that it's much more likely they're going to get stopped out sooner. So a lot of the time, these margin requirements would happen after hours or over the weekend, things like that. You see the market open, suddenly people are getting stopped out. So it was this sort of flush in terms of the move lower, as many people were stopped out of speculative positioning rather than people that were holding physical silver. So this is the paper market side of things. On the flip side of things, we can see what's been happening in terms of China. So Shanghai is trying to essentially provide the new hub for gold and silver trading around the world. But what's notable is that there's a much greater degree of delivery when it comes to Shanghai, and therefore much of the silver around the world has been flocking over to silver. They want to be the number one repository, essentially, of silver. And you can see this here with the blue dots, essentially showing that the stock of silver has been dwindling. And with that, generally, the Chinese have paid a premium, and we've seen that over time as well. So the price for silver and the price for gold is higher in China than it is for the likes of COMEX and Europe and the US. And in part, that's because we don't get the same kind of price manipulation. We have the reality of what's on the ground and what people are actually going to pay for the physical material, rather than speculating on prices and potentially trying to lead prices in one direction or another, in line with the potential risks to the likes of COMEX, to the likes of the CME. So I would say there's likely to be much greater speculation, much greater degree of manipulation in those traditional markets in Europe and the US compared to China, where they're actually looking to take delivery for the most part. And there has been very significant demand as we see these stockpiles build. Now, one element that I think is worth noting is that we've seen this correlation with treasury yields. The sharp downside move recently after that Kevin Walsh news for the US 10-year has by and large gone hand in hand with weakness in terms of silver. And you can see here it points towards a potential stretched move towards the downside for the 10-year yield that hasn't necessarily been followed through. So that could point towards further downside for silver. If you look at the Japanese 10-year yield, the relationship is even closer. You can see those swings that we saw in the past don't really exist. And you can see the weakness that we're seeing. In actual fact, this comes off the back of a very successful bond auction in Japan, where they had very strong demand. That points towards the Japanese 10-year yield as being a very good proxy for the directional bias you should hold when it comes to the likes of gold and silver. Now, bear in mind that we, of course, have the risk right now of a new prime minister in Japan with an expansive mindset and higher spending and alike. There is an expectation that there's going to be something like 28% higher debt issuance in 3 years' time, owing to the elevated borrowing costs that are currently in place in Japan. So I wouldn't necessarily say that the Japanese fiscal position and treasury position is resolved or somehow in this great standing, but certainly it does feel like things have changed. And as long as that continues, does provide the basis for potential weakness in terms of silver prices. Another element, of course, is the US dollar. Primarily, we value these assets, gold and silver, we value them in the US dollar. That means if we see a potential bullish resurgence for the greenback, so that takes a toll on sentiment for silver. I've inverted it here by way of essentially putting euro dollar instead of dollar index. So essentially, if it moves lower, it means a stronger US dollar. And that's what we have been seeing of late. We've been seeing some resurgence for the US dollar. It's a little bit of a sort of choppy one. There's some indecisiveness within markets at the moment. Certainly, of course, we've just come off the back of a week that saw the jobs report coming out better than expected. That's the kind of thing that could potentially strengthen the US dollar. But then some question marks around the sort of disparity of jobs and the spread of jobs, where it's highly reliant on some sectors, the likes of healthcare and education, and very little job creation elsewhere within the US. We've also seen that massive write-down of over 800,000 jobs for last year. So it's not all great news. So a little bit mixed, but certainly keep an eye out for that US dollar move as well. This is a chart that, in actual fact, I'll probably show you. We'll just go full screen. That's probably going to do the job. So essentially, this shows you the different sessions within which we see the selling pressure. Now, essentially, the blue squares are for Asian markets. The green squares are for US markets, and the yellow squares are for the European session. So what you can see is that we have actually seen some pretty significant moves within the Asian session in particular. And I would say, I would note that if you look at the sort of price action around sort of China and the Asian market and think, well, that doesn't make sense because we've got this huge demand when it comes to the Chinese market in a physical sense. We also have a great degree of speculation that's been happening recently. As you can see here, Chinese trader bets big on silver collapse with $300 million wager. They have to some extent tried to rein some of that in. But I would say what's notable at the moment, of course, given the fact that we're coming into this Chinese period, or we're in this Chinese period where their markets are essentially closed, we're not necessarily expecting to see the same kind of physical buying in China as we have done in the past. That means that we have markets that are potentially open for that sort of downside manipulation for the likes of the Europeans and the US. However, you have to also look into the fact that in China, you still do have some that are trying to manipulate this market lower. And we did see a sharp move lower in the Asian session overnight yesterday as well. Like I said, keep an eye out for moves within Japan, the Japanese bond market as well, because like I said, there was a strong bond auction. We saw weakness in terms of yields, and that, by the correlation that I showed you previously, does point towards the possibility of further downside coming into play. So here's the chart for silver. Let's just sort of go into the monthly time frame. This is what's concerning, right? That massive upper wick and selling off from there. You know, that looks like a big blow off top that could really collapse in a meaningful manner. Let's just go to normal prices. So that points towards a possibility of further downside to come. The weekly time frame, again, you know, we saw such a huge ramp up. You know, are we sort of taking the heat out of this market before we get some degree of normalization? Are we coming into this sort of zone before we move higher? Where are we standing in terms of fib from this massive move? So we can see from a fib perspective, we've already essentially tagged the 76.4 fib. So that's a potential bottom to watch out for. Again, onto the daily time frame, it's a similar kind of picture. So we've got that ascending trend line coming into play. We've got 76.4 fib. We're sort of moving lower at the moment. And certainly if we look at the short-term price action, we can see this this move that we're seeing here. So we've got that move, the 76.4 fib, tagged it. We've then broken down through your first swing low. We've rallied, essentially found that as new resistance, and now breaking through prior support, 7377. That sort of points towards a continuation of this bearish trend, really. But, you know, you look back at that daily time frame and say, well, you know, even if we drop down into the sort of mid 60s, I think it's a good chance that soon enough, the confluence of that ascending trend line alongside the lows and that 76.4 fib, that looks like an interesting zone as we move forward. Like I said, we've still got a week until the end of this Chinese holiday, and in which case the sort of physical buyers come back into play. I think there is a good chance that we do see further downside over the near term. Perhaps we come into this area and we see things stabilize and start to form a bottom. I don't necessarily think we're suddenly going to shoot back up to the prior highs. But yeah, we for the most part have been seeing some sort of stabilization and a decline in terms of the volatility. That will be evident through the ATR. Let's just get the ATR and you'll be able to see exactly how things have sort of shifted over time. So we're seeing it sort of easing off as things stand. That's a 14. Let's get it on a sort of shorter. Let's go to maybe a 1 week, which would be a 5-day. So yeah, we're sort of easing off in terms of the average true range. So volatility easing off. We're still elevated compared to the norm, but nonetheless, you know, for me, I think there is a good chance that we do see some weakness. Of course, there's been a lot of talk about the weakness potentially just being a European, US-led thing, and that the Chinese essentially can't do anything about it, whereas in the past they've been perceived to have the upper hand on the bullish side of things, as they're very much just trying to swallow up all of the physical silver. But as we can see during the Asian session, there still can be some pretty significant moves in the Asian session, in part also down to Japan and what's happening in terms of their bond market. So for the near term, you've seen the 76.4 fib, the sell-off, the rally into prior support term resistance, the breakdown through support. This to me points towards further downside to come in my mind before we potentially come into an area to possibly stabilize it. And that might be around the 64s. With the horizontal, the 76.4 and the ascending trend line starting to come into play. I hope that's been useful. Make sure to like, subscribe, and follow for more. My name is Josh Mahony, Chief Market Analyst at Scope Markets. Have a great day and good luck trading. Thank you.